The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And checking out where everything's at right now in the markets. We got the S&P up $1.25 there. We got the Nasdaq up 13. We got the Dow pushing on down 20 points right now with the Russell down 2.3. Gold is up 3.5 points on the day right now, and copper is up about down about 1%. Looking on over at silver, it is basically flat on the day. Corn's down a few points, and soybeans are up 16, and which is a nice solid move, nice 1% up move on soybeans. We got oil up 80 cents right now, pushing on up after that big move off of the oil inventory report that helped oil jettison up, pulled back, pushed back up, pulling back right now. We'll see where it ends up by the day's end. And then looking over at natural gas, it is down 1.5%. No big surprises right there. Natural gas is consistently a 1 to 4% mover, and but it's also dangerous to trade due to low liquidity. So if you want to trade natural gas, definitely trade it on Nadex. So completely 100% defined risk, and you can't be stopped out, and you get massive leverage. Euro dollar right now, looking at that, it's down 25 pips. Pound dollar down 90. Aussie dollar down 10. U.S. yen down 32. So the dollar showing a little bit of weakness there against the yen. U.S. Canadian up 19, and U.S. franc up 15. Dollar index as a whole showing strength across most currency pairs, and bonds also ticking higher. And the markets as a whole just having a hard time trying to break out, and really just hold on to these breakouts. And I think we're just a few ticks away pretty soon here from seeing this turnover here. So let me pull this up. We'll check it out. We'll look through everything we like to do every day. We like to make sure, one, you're caught up on the markets. Two, we go in and we catch up on the fundamental reports. What came out, what's moving the market. Three, we like to go into what's going to be moving the market, over the next week here, tomorrow morning. Hope you get that trading plan together. And we want to make sure you understand the deviations and how to use those. We give a free 2-week trial on those. You can check those out. Along with the Diagnostic Box Spread Analyzer and the Nadex Education, all that in one package, 2 weeks. Check it out over on TFNN. Before I go into all that, over on TFNN, there's a few things you want to go to. One is come out and meet me and Tommy and Dan Cook out from Nadex. He works for the Nadex Exchange, live in Denver, and this is just a couple weeks away. I mean, it's just right around the corner. And so come on out there, meet us. If you're in the area, great. If you want to fly out there, it'd be great. We had a great workshop last time out in Tampa. Got a really, really good feedback. I'm going to be going into the binaries and the spreads and teaching how I use deviation levels, how I trade on these, answering your questions live right there. And I'll be there just to, basically answer all the questions you got. So feel free to come on out, and we're giving away some spread scanners as well. And we'll also be giving away silver, and we'll be giving away a copy of Tommy's book. And I'm working on a book right now, so hopefully I'll have one in there, and then next year here we'll be able to throw that in the mix as well. And a couple other things we're giving away, but there's a lot of stuff we're giving away. Subscriptions to Tommy's newsletter for the Gold Report. So there's a lot of giveaways happening, but the biggest giveaway is the education you're going to get that you can go and you can use immediately when you get back home. You can start using it on Sunday or Monday, trading right after we have this. And again, it's free. So Nadex is basically footing the bill and allowing us to present this to you. So definitely take advantage of that. And, it looks to be a very powerful workshop. I think everybody will really appreciate it. But you do have to register to save your spot. So make sure you do go ahead and register, and make sure you save your spot there. And space is limited, so make sure you're going to be there if you do register. But again, please register right away before the spots are gone. And but I'm looking really forward to it. We had a lot of fun at the last one. And we're going to go in, and we're doing that. Let's see here what else we got going on. I'll be speaking at the New York City Trader Expo, so if you want to come out there, that'll be later in February. You can come check that out. And we also got the Super Silver giveaway. We're going to be giving away a bunch of silver. And you want to make sure you're hopping on there, giving away every hour. Just go on, fill in the form. It's very simple. And you can hop in and do this. And then Ken Sharif has a webinar that you probably don't want to check out as well. So go ahead and there's a lot of great things on TFNN. Focusing you here back on Nadex. Do go over and we get the Diagnostic Box Spread Analyzer. So click on that and again, immediate a 2-week free trial. Get access to not only the box spreads, but also the education on the binaries and access to ask me all the questions you want about Nadex directly. So there's a whole Ask Darrell section. And then also you get access to the deviation levels. So if you're trading the S&P, the NASDAQ, the Dow, if you're trading the Russell, if you're trading corn or soybeans, oil, natural gas, gold, silver, copper, if you're trading euro dollar, pound dollar, Aussie dollar, euro yen, pound yen, US franc or US Canadian, those are all the ones I'm giving away the deviations on right there with that. So go ahead and check that out. If you don't have an account with Nadex, hop over to nadex.com and get an account. It literally takes 5 minutes to set up a live account, and it's only $100 to fund it. So if you go to create account, click start, and from start to funded, you're talking 5 minutes. Okay. Also, make sure you do grab a demo account. Under our products demo account, fill in the username, first name, last name, phone, and email address. Click apply for demo, and you'll be able to access it right away. I mean, within basically they'll send you an email within a couple seconds. If you hit apply for demo with your password in it, you'll be able to log in and see what this whole Nadex thing I'm always talking about is. All right, so that's Nadex. That's how to get a hold of it. So you know what I'm talking about when I'm talking about it, and you know how to get into and check out the deviation levels. Because again, those are posted, like I said, every day for you. You can go in here and look at them. We'll review those here in a few minutes. So I'll leave those up there for a second so you can just check them out. And we'll go back and we'll do a chart scan here in a minute. But last night, so what happened last night? Well, we didn't have a whole lot happen in the evening. There were a few reports. We had new motor vehicle sales. I'll pull up a report on that come out of Aussie. Dollar there out of Australia. And let's see here. So it was a medium impact report, so we didn't expect just a massive change on it. Also, the other reason it's medium impact is really not an expectation on the report. So that's one of the big reasons we don't make that a big focus. But it did come in. It came in at 7:30, so that'd be 6:30 right over here. And you see a little volatility, and it sort of moved down on that. But the number was better than it was last time. So it's not, like I said, it's not really one that you want to judge base your trades on. And going on over to a little higher impact. So we'll look at this morning and check out what we can find. And there we go. All right. So this morning we had retail sales in the U.S. Franc. Now that one is a medium impact, but it actually does have an expectation. So meaning there's a forecast on the number, and that's the retail sales year over year for Switzerland there. And that comes out at 3:15, so 2:15 Central Time. And so if we go right over here, you can see we did have it was worse than expected. We got a little drop, but I wouldn't, nothing to write home about a 20 pip drop or so there on the U.S. franc. So not bad. I mean, you had the report. The problem is it happened at once, and then it pulled back. So it really wasn't just a great trade again. That was a medium impact report. And there's a couple other, small or medium impact reports on the euro. They had quite a few little, reports come out. Again, no major changes on there. And let me see. Let me get rid of these. And there we go. Okay. So pull those off. All right. And that was yesterday. Nice bit of a move there. Look at that, man. That's why you trade Nadex. That'll hurt if you're not trading Nadex. But over here, so the euro dollar had some reports come on out, and they came out at most of the heavier reports came out at 5 and 5:30 over in the European area. So 4:30 Central. You can see right here those reports started coming out. We got them at 5, so I guess 4 Central. So they came out. CPI met expectations. Core CPI year over year. Met expectations. 10-year bond auction actually ticked up a little higher. So Germans had to pay a little bit more in interest on their bonds. So nothing majorly market moving. And you can see right here, we didn't get just a massive move. It went from 271 to 330. So 325, whatever right there. So you got about 40, 50 pips. But again, the bond auction really is sort of negative. So they were having to pay more, and that bond auction, though, didn't come out till 433. So there's a little bit of 333 right there. So it sort of coincides with the top there before it fell back down. We'll pull it back up a little bit in a minute, and we'll look at how that actually hit with the deviations. Pulling on over and looking on the U.S. side here. Right here we got the core CPI. Came out this morning. That is a high impact report. And I'll get rid of these on here too. We drew a bunch of lines on there yesterday. And there we go. So on that one right there, core CPI, it was released at 7:30 Central, 8:30 Eastern time this morning. And right here, report comes out and drops because it was worse than expected. So market moves down, but then it pulls back up in the S&P. Not all the indices, but the S&P actually filled in its gap. And so now it's just sort of oscillating around that area right there. But it did drop right there on that core CPI number. That was negative. The CPI month over month came in at a flat 0%. And then we had the long-term purchases, the TIC report coming out, and that number came in at $53 billion instead of an expected $19 billion. That came out at 9 a.m., 8 a.m. Central, and that's really when we started seeing the up move right there on the long-term purchases. And that's the difference in the value between foreign long-term securities purchased by the United States citizens and U.S. long-term security purchases by foreigners during the same reporting period. Okay? So the number went up, and basically what it does is it's a balance of domestic and foreign investments. So, if foreign investors are putting, say, in this case, $53 billion in stocks and bonds, and the U.S. purchased $10 billion in foreign stocks and bonds, the next reading would be, the difference between the two. So if they did, 50 and 10, the next reading would be 40. So that's, again, foreigners putting in. So are they putting in more? Are they putting in less? And the market impacts can be big, but it will vary quite a bit over each month. And again, basically that's the demand for domestic versus foreign securities. And that number has went up. Foreigners buying more than U.S. citizens are buying foreign stocks and bonds. So they're basically, foreigners are buying more of our stuff than we're buying of theirs. So it's happening. And so that ticked up. So that was a positive move in the sense for the market itself. And then we had a capacity utilization came in a little better than expected. It's a medium impact report as well. That came out at 9:15, 8:15 Central, so right around here. And that was, a little better, so that gave another boost to the market. And then looking over, we had industrial production also released a little bit better than expected at the exact same time, giving another reason to give a little bit of a market boost. And again, none of these are massive reports besides the core CPI, and that one was negative. So it did mute some of this median positive news that came out. Then a little bit later, we had oil get released, and we'll talk about that one. But it's been a volatile ride on oil today. It's flowing up, and now it's pushing on back down at the moment. Be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex symbol GPL or on the Toronto Stock Exchange symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome back here to the Diagnostic Trading Hour. Just running through the reports. We just had the oil inventory report come out. We were going through. Number came in a little higher right there, or a little lower. So positive number in the sense of for the price of oil. But it came in, and oil came in at, let's see, negative 1 million barrels from previous week. They thought it'd be at 2 million barrels from the previous week. And they were at 1.3 million last week. So not only did it not meet expectations, it was lower than last week. And if we go back and look right around this date and time last year, let's see, January last year. I've got to add in a little bit more history. There we go. It's actually better than it was last year. Last year it was negative 3.4 million in the same trading week last year. So, but overall came in and pushed oil higher right off the oil inventory report. It did pop on up. It actually did hit 0.5 level, and we can go in and pull up the deviations real quick on oil. I guess while we got it up, we'll wrap that one right now and check it on out and see where the levels were. So we had to move on up on oil. Let's see here to 93.99. So right here, where it was just hesitating, okay, that was the first deviation level. And then it moved up a little bit higher, and the next deviation level was 94.28. So right there. So it hit the 0.5, it hit the 0.7, and you can see how it stopped at 0.5, it hesitated. News report, and that's on the news. Okay, so on the news, it basically went right up to that and hesitated, pulled back down, then it forced its way through it, hit that on very high volume, which is a good indicator of a potential pullback from that point. Once it hits it, then it turns around, comes back down. It's been hesitating right now, right at this 0.5 deviation level again, and we'll see where it ends up. But it's just hanging out. I mean, it's basically a perfect scalping level. So let's hop in right there and just enjoy yourself right now if you want to go in for ticks over and over and over again. What a cool way to trade it. But nevertheless, deviation levels right on track again for the day. All right, so let's go ahead and check out what other reports we got going on and see what can help us look forward. We got the beige book coming out, medium impact. Don't expect it to rock the markets, okay? But it is something that you want to just be aware of, and if any surprises come out inside of it. But it's basically the analysis that one of the books that the Fed uses to make its analysis. However, there's two other books that are private and confidential, and those are the green books and the blue books. So we don't really get to see those. And they're expected to be the actual books that make the big impact on the decision. The beige book is just what they let the common folks see. So it's not as big of an impact. And anyways, that comes out at 2 o'clock today. So just be aware that it is being released. And then let's see here. Yen. Yen can have a report. They have a medium impact, tertiary industry activity report. So what is that? That is the total value of services purchases by businesses. It's a leading indicator of economic health, so it can have a decent impact. It goes in, and it's usually the changes in spending can be an early sign of economic activity, hirings, earnings, investments, etc., etc. Okay, so that's their tertiary industry activity report month over month. Now, as far as big numbers coming up tonight, Aussie dollar. Okay, Aussie dollar. Employment rate, unemployment rate, being released again tonight. So you can hop in before the report and do a spread with the Nadex spreads. You can do a strangle with the binaries. You can go in after the report, and you can go directional like on the daily binaries. It's the nice thing about that is you have until 3 o'clock. Okay, so you have until the next day actually to be right about direction. You can use the deviation levels to help you pick it. And then the other thing you can do is you can use the spreads. If you're going to use the spreads on this, you're going to want to use the latest expiring spread you can find, okay, which will be the 11 o'clock expiring spread. That's the one that will be open. There'll be several of them open. But and if you're having trouble finding those, again, that's the whole point of the spread scanner. You'll just hop over. You'll click on spread scanner. And then you can choose, whatever you want to choose right here. So you can choose, say, Aussie dollar. And it'd bring it up right there. And then, say if you want to sell it, then it'd show you, hey, 1 pip to break even, $10 risk, $88 reward. And it'll actually show you the expiration time. So, I don't know if y'all get this, how crazy this is. But we're talking about going in, if you want to sell the Aussie dollar right now, and this is a little late to be selling the Aussie dollar, granted. But you're talking 2 pips to break even. So basically it's trading on par, okay? $10 risk on this trade with a potential of 187. This is like shorting. This is just like shorting a mini lot on the Aussie dollar. Okay? If you do 10 of them, it's like shorting a lot. So it's a $100 risk for an $1,800 potential reward. Do we expect to be able to move right now? No. But again, tomorrow night, what do you expect to move? Aussie dollar, unemployment, employment rate coming out. They're both in the same direction. Expect a bigger move in that direction. Stay right there. We'll be right back to talk a little bit more about this after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the Nasdaq 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. Checking out a few different things, looking at the Aussie dollar. And why are we looking at the Aussie dollar? Well, the main reason is because tonight they have their unemployment rate coming out. And let me see here, pull this up. So the report's coming out, and what we got on the Aussie dollar, that's going to come out tonight at 7:30. So they have the employment change and the unemployment rate. The unemployment rate is more important than the employment change, okay? It will outweigh it. If they go against each other, it'll usually go with the employment change or be flat. If both are positive, usually will move up. Both are negative, usually will move down. And it does usually take some time to get there. So it gives you a chance to actually hop in after the trade starts. And if you want to trade Aussie dollar, and you want to do this trade right now, you're going to be putting up a decent amount of change. You're going to be putting up, at least, $100, $200 in margin on the trade. So $10,000, 50 to 1. It's a little more than 10,000, but pretty close to $10,000. Then you're going to be putting up a couple $100 to do the trade. Okay. And with this, the exact same trade, $10. $10, okay? The leverage is insane. $10 to control 10,000. All right, less than $10. We're talking 1,000 to 1 leverage, okay? $10 to control 10,000 US dollars. So 1,000 to 1 leverage, but you can't lose more than $10 on the trade. And you can't get stopped out of the trade no matter how far it goes against you. Hopefully you're starting to see the benefits here. I don't know how better to put it. But anyways, you can go in, and so the report comes out, positive, negative, whatever. You can hop in, buy, sell. You do want time to give it to move. It can take a little time to move. And, if it does move fast, keep that in check as well. But they'll be ones that will expire at 11 o'clock. And with that, it'll probably have a little bit more premium in it. So maybe you'll have to, have 5 pips or whatever, move to break even. But you can do that. Also, make sure you're using the deviation levels. They'll be updated tonight before the report. So hop on there, use those deviation levels, and you'll be able to use them to know sort of like what price levels you want to be targeting. Okay, so where you need to be tightening your stops, or if you're doing binaries, what strikes you want to get into. And one of the things I always tell people is there's basically 3 prices you can count on a binary. You can count on it being worth 0 if it expires out of the money. And out of the money, by the way, on a sell means that the price is greater than the strike, because on the strike you're saying it'll be less than or equal to it. On a buy, it means the strike is the underlying market. It's like the $1,000 is greater than the strike you bought. And so that's on a binary. If it's out of the money, it'll be worth 0. If it's worth 100, if it's in the money, that means that the underlying market is greater than the strike you bought if you bought. And that means the underlying market is less than or equal to the market if you sold at expiration. So that's the 0, 100. Okay, but what about the third one? The one that you can always count on, because people always try to figure out how do I price these and what do I do and everything else. It's going to be worth $50 when it's at the strike price. I don't care if there's 22 hours till expiration or 22 minutes till expiration. If the Aussie dollar is trading at the same strike you're trading on Nadex, it'll be worth $50. Now, give and take a few dollars. Okay, so if I buy at 10, I'll probably sell honestly like at 43, bid-ask spread and everything else and whatever. It's not that it's that big. It's just I like to, I don't want it to miss my target by 2 ticks and not get out of my trade, and that it falls back in my winning trade. That's 400% up, becomes a losing trade. Also, if I'm selling, let's say I sell it at 90, which I can't lose more than, the cap is 100 on the value, right? So 90, 100 minus 90, $10 is my risk. If I sell it at 90, I buy it back at usually 57 when it hits the strike price. So I'll go in and go, okay, what's my target strike? All right, I'll get in that trade. I'll get out at, 57 if I'm selling to buy it back, or I'll get out at 43 if I'm buying to sell it back at 43, using the facts that I know consistently about the Nadex platform, about the binaries and how they work, and using that to my advantage. Okay? Now on spreads, you can let it go as far as it'll go. Just make sure you are tightening your stops. Like when it passes the deviation levels, you may want to tighten it to the last bar. So either using 10-minute bars, or I use a unique kind of Renko bar, whatever kind of bar you're using, the bar that breaks through with volume, that's the one usually that you want to be tightening your stop to just below the low of that bar. All right, so that gives us a little summary, a little idea for you there on the Aussie dollar. Looking on over at this Thursday's trade, we got building permits. Okay, so tomorrow morning, there'll be a few things come out. The franc has a medium impact, PPI. Euro has an ECB report. Canada has a foreign securities purchase come out at 8:30. So that's good. I love it whenever you get the U.S. and Canada having reports at the same time. Makes usually good for a U.S.-Canadian trade. But tomorrow morning, big thing we got building permits, unemployment claims, and housing starts all at the same time right here in the U.S. Building permits and unemployment claims both being big impact reports. Building permits are helpful for trading copper. Okay, obviously they're decent for the economy as well, so you can be looking at major indexes. And then, of course, you can pick currency pairs like euro, dollar. But again, U.S. Canadian could be a good one because, again, the Canada has its foreign security purchases report coming out. So that could cause some volatility in the Canadian dollar. So when you put the dollar Canadian, the U.S. dollar to the Canadian dollar together, they get some nice volatility. So it could make for a really good report looking at direction at that 8:30 a.m. Eastern time tomorrow morning. And then at 10 o'clock tomorrow, we're going to have the Philly Fed Manufacturing Index at 10 a.m. So that's going to be more of an impact on the markets as a whole. We'll be looking at that to check out what the index is. And it does come out, like I said, right at 10 o'clock. Okay? And then natural gas storage. Well, what do you trade on natural gas storage? Natural gas. Pretty simple. And, of course, you use the deviation levels to help you pick your strikes. And one of the things I've seen that is pretty cool is a lot of times natural gas will shoot up. It'll pull back. And let's see if it did this last week. Because this is sort of a good learning opportunity. We'll see if it, it may not even have happened, but I just want to see if it did happen last week. Let's see. So we have oil inventory report. Comes out at 9:30 Central Time. Okay, so natural gas already moving down quite a bit. Was it last Wednesday? Let me see the last date it was released, because I know we had some weird stuff with all the holidays and everything else. It came out on the 10th last time. Okay, so we actually got to go to Thursday. Yeah, it usually comes out on Thursdays. All right, right here. Check this out, okay? Natural gas, 920. Pop! Goes up, all right, on the report. So it came in, inventories were lower than expected. They came in at negative 201 billion. The expectation was negative 185, not billion, but British thermal units. Pops up, comes back down, giving you an excellent trade, okay? Now you can go in and you can target that 3.2, like you're looking for the same level with the pop it had right there. Now, when it comes back down, you can target that and go in it, so you don't have to waste money on a strangle or a straddle by going both directions at the same time before it. You can wait, let it come back down, and pull in, and there you go. So it closes down. About that time, you need to be looking, okay, this is the one I want to buy. So as soon as this bar is coming to a close, you're checking that out. And, I mean, you can even go in and look at, you can break it down a little bit further and look at 1 minute reports. Let's see, I'll have to add a little more data. But let me go far enough back on here. All right, so we'll hop on over. We're looking at, let's see, the 10th. One more day forward. There we go. Okay, zoom in on this. And as you can see right there, report comes out, flies up, pulls back down. Okay? And then, I mean, in every bar, I mean, it's just really, I mean, it's tracing lower, 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 lower. Okay, this is where you're expecting it to go back to. So you're looking at this strike right here, somewhere around the 3204. It's probably a 3200 strike is what you're looking for. So it's pulling back, and now what you're doing is you're waiting on that pullback. It's going, and finally, boom, you get triggered, okay? So you're buying on that breakout of that previous high there. But you do want to see a pullback getting at least halfway, if not further down, okay? So you buy that strike probably somewhere around $20 or so when it gets down here, and then you sell it when it gets back up at around 43. Okay, so you got 1-to-1 risk-reward ratio, very simple trade. Notice, I said sell it. Do not hold it. Okay, because that winning trade could easily become a losing trade if it expires, which it would have. Look at this. It would have expired out of the money, and your winner would have became a loser because it would have fallen back down. So, because we never did, after it hit that, I mean, you had a few times where it did it for you, but then it just actually stayed below the strike level. So if you're going into the strike and you bought it, you held it, you lost. If you sold out right when it got there, okay, remember the 3 things we can know? 0, 100, and, $50. So 43, 57, whatever right there with, spread and everything. Use that to your advantage. If you're buying a spread on it, you buy the spread, you get out when it gets there. Don't hold on to it. You're going to give back. Now, you wouldn't have given up all your profit. You still would have made something on a spread, but you would have given up some of it. And why give it up? Okay? So, just use that to your advantage. And so that's a way to trade natural gas inventories. And let's see here, in oil today, sometimes it does pop back. When it does, that's awesome. It has to do it pretty quick, though. It can't do it like this, where it's just slowly moving down. And anyway, so it pops up right on the report, and we didn't really get a massive chance because it popped up and then kept going up and then up a little further. Now let's see what else we got here. That's our employment. That's our natural gas. Our affiliate Fed. China is going to have its GDP number come out at 9 o'clock tomorrow night. It's also releasing its fixed asset investment year to date over year and industrial production year over year. MBS press conference. It's going to have release its retail sales. All of this is coming out of China at 9 o'clock tomorrow night. So that could move sort of everything. Currencies, indices, all that, depending upon how those numbers come in. So just be aware, tomorrow night, Thursday night, a lot of China reports being released at 9 o'clock. And I'm not so much saying that you place a trade on it, as just be aware of it, especially if you're holding positions overnight, that could rock the markets when we wake up in the morning. And then looking on into Friday, we got retail sales on the pound. Okay, so 4:30 a.m. retail sales on the pound. So if you're an early morning trader, or maybe it's just regular trading for you, depending upon where you're at in the world right now. But retail sales right there, 4:30 a.m. And then the U.S. dollar, we got the preliminary University of Michigan Consumer Sentiment Report. And you should be focusing on indexes on that report. All right, that really does wrap us up for the week. on the fundamentals, let's take a quick review and hop around the different futures and forex markets and see where everything's been playing out today on the deviation levels. Okay, so right here, we'll start off with the S&P. So the S&P right now, we had a settlement yesterday of 1465.3. So this is basically the settlement price. It dropped on down to the expectation, by the way, was it moved down to 1459.1. And oh, it was just shy by a point of half a deviation. So pretty spot on, though. Okay, so I've moved about half a deviation down. I mean, you're talking, like I said, a 1 point, 4 tick difference. And like I said, I like to look for things within less than 5 ticks. So if it's 5 ticks or less, I consider that it hit the point. But right there, and then it turned around, moved on back up, filled in its gap, and is still sort of pushing up on the highs right now. So we'll see where it ends up for the day. And then let's go ahead and scroll over, by the way. If it does keep going, if you want to know what the next target is, you'd be looking at 1471. 1471.5 would be a half deviation move to the upside. Okay? So just so you have that right there. And then looking on over at the NASDAQ, let me get rid of these outdated levels right here. And let's see, actually there's another way. I might be able to fly through it a little bit faster. Here we go. All right, so we'll look at, got that, got the NASDAQ, I'll pull that up. And I also can speed it up, we don't need many days in here. There we go. Okay. And let's see, to make it really fast, let me just feed them right in. Okay. So on the NASDAQ, we can see it settled out right here. It pulled up, actually, showing more strength yesterday. Was really one of the weaker indices. Today, pushing on up, hit that 0.5 level, went up at that 0.7 level before it pulled on back down. But right now, it's just sitting right up again at the high, sort of like we had over on the S&P. And then over on the Dow, looking at that, and seeing where the deviation levels hit on that. It has been the weak one of the group today. Fell over last night down to 0.5 and hesitated right there before finally deciding to break on through it and then turning on back around. And right now, literally just a smidgen shy, okay, of filling in the gap from yesterday over on the Dow. I would not be calling that a gap fill play, but it is working on filling the gap, so I guess you could say it is a gap fill. But it's taking its time. So it's almost 2 o'clock in the trading day, and it hadn't filled in the gap yet. Not quite the use of the gap trade you're looking for. But, hey, gap fill's a gap fill. Looking on over, checking out the Russell. On the Russell, pulling that on up there. Almost hitting its 0.5. I mean, just couple ticks shy. What do we get on the low there? 876.7. 876.6. 1 tick. Okay, like I said, within 5 ticks or less, consider it hit. So went down, hits 0.5, bouncing on back up, almost back to yesterday's settlement price. And looking on over, we'll go ahead and check out a couple other reports right when we come back before we wrap up for the day. Stay right there. Do that right after this commercial break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, let's wrap it up and going through the last of the diagnostic deviation levels here. And we've hit quite a few of the markets already. And then, let's see, we'll look at natural gas right now. And let's see, natural gas, what month are we on? I'll pull that up real quick. Natural gas, we are, let's see here. Oh, it's already closed anyway for the day. But I can pull it up here. Let's do that. I think I have it in my drop-down list. There we go. Natural gas. Okay, it's on February still. And so we can see that there, 0.5, 0.7, 1 deviation. Bam! Love it when it happens. Goes down, hits the full deviation mark, comes on back up. And it doesn't happen. It's not that it doesn't happen that often. I mean, 1 deviation, 1 deviation. We go back over and over. Moves up, 1 deviation. Okay, so over and over again, we're getting those full deviation moves in natural gas. So it's just sort of crazy clockwork happening there. But anyway, so that's our natural gas right there. Let's check out what we got. We'll go over to our corn and check it out. And on corn and soybeans, let's see, corn, we should be on the March. Got that one. So it had sort of interesting move. It moved up overnight, just about, just shy of hitting. Let's see what we have, a high on that of what, 735 across the board there. Yep. So you're talking 5 ticks, okay, from the half deviation mark, and then pulls back down to a negative half, which is a deviation move, okay? So we got half up, half down. That's 1 full deviation. So a full deviation move looks like it's trying to pull back up even and hit that settlement price. And then looking on over soybeans, let's see the contract there. I need to update mine, but it's like a ZS0313. That is not wrong. Let's see here. What do we got going on? It ought to be pulling it up. Oh, I'll update it in a minute. We'll go over here and pull it up. And I just need to add it into my instrument list over there on the platform. But we had deviation levels. We'll go ahead and check that out on soybeans. On up to a move, let's see, 1431.2 was our one deviation mark. We actually were at, I mean, it already moved overnight. And on that move there. And then it pulled on back down. Let's see, the settlement yesterday was 1413.5. Didn't fall back that far. But right now, it's still moving up. Where could we go next on soybeans? 1440.1 would actually be the next. That'd be a 1.5 deviation move. So I don't know if we're going to get there before the day's over. But what about if we go back down? What are our deviation marks? So we had the 1413. Let's see. We got 1425.9. So right there. Okay? It's going to be our 0.7 deviation level. So you can see it sort of bounced in between that. Before we finally decided to break up a little bit higher. And then we can go on in here a little bit tighter. We can check out what other markets we got. Let's focus now. We can pull up, let's see, gold. And I'll pull up the gold markets. We got gold right here. And pull that one in, and we'll pull in silver. I guess we'll hop on over to silver first. Come back to gold here in a second. So silver moved on down, 0.5, 0.7, back up. And just seeing some, great moves over in the gold markets. And then, let's wrap up, because I know we're about to wrap up the show. We'll wrap up just looking over at pound dollar and euro dollar real quick. And so on the pound dollar right there, moved on down, settlement 0.5, 0.71. I mean, it's bounced right off the 1. Came back down, decided to nail it one more time, but didn't quite make it to 1.5 deviations before pulling bomb back up. But I mean, it's a perfect 1 deviation move overnight trading. Came back up and decided to really just slam through that level. And then, like I said, one more here. We'll do euro dollar. And euro dollar, not quite as volatile. Not quite as volatile usually lately. But settlement right here, moving down 0.5. Settlement 0.5. Settlement 0.5. Can you say swing trade? Okay. All right. Well, I hope y'all have a great day. Have an excellent trading day and a good evening. And stay tuned. We got another great show coming up for you. I will see you tomorrow right here on the Diagnostic Trading Hour.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.